And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Another beautiful day out here where we got great weather and bad politics, that's for sure. But happy Friday to you. And we got a couple things on the board. We got the weekly close for the CMEs. We're going to cover some crypto news. And of course, this girthy red crandall. We're going to cover some of this action right now, why that's happening. And we're going to go over some short-term and long-term targets for Bitcoin. So sit tight. And first thing we're going to cover is some of the crypto news. And I've been kind of playing around with this, whether we do the news in the beginning or the end. Somebody comment in the comments below. Let me know what you think. Should I put the news in the front or the back? Anyways, first things first, Ripple unveils the XRP powered enterprise payments with a major Brazilian bank. Yes, Ripple is going to use RippleNet's on-demand liquidity AUDL with TravelX Bank in Brazil. The deal between the two firms will allow the utilization of XRP for AUDL purposes for the first time in Latin America. According to the announcement, the solution, XRP, will allow Brazilians, the AUDL solution will allow Brazilians to send money anywhere with low transaction fees without the need to hold pre-funded capital in the destination market. And Garlinghouse said, quote, Brazil is a key market for Ripple, given its importance as an anchor to business in Latin America. It opens to crypto and countrywide initiatives that promote fintech innovation. As a result, the market is experiencing an explosion of activity as institutions look to adopt crypto and blockchain technology to solve customer pain points. And something to note, more than 780 billion payments are sent into Brazil annually, making it an opportune market for both Ripple and its customers, who will benefit from the capabilities of cryptocurrency to enable cheaper and faster cross-border payments, noted Ripple in its announcement. So, yeah, there's a lot of crypto activity going on in Brazil right now. Even Warren Buffett bought a crypto bank. I think it was called Nubank in Brazil. The guy who called Bitcoin rat poison squared, what did he end up doing? Buying a crypto bank. So here's another announcement out of Australia. So the asset manager Monochrome receives approval to launch a spot Bitcoin ETF in Australia. So look, governments around the world are approving cryptocurrency initiatives. I wonder why. They're trying to help their economies. They're trying to help their citizens. They're trying to be a part of the future. And here's what it says, quote, the regulator's approval of this license variation represents a major step forward for both the advice industry and retail investors, allowing advisors to meet the market demands of their clients when it comes to nascent crypto assets classes. That was from Jeff Yu, the CEO of Monochrome. So we've been trying to get a spot ETF here in America. The SEC has been putting the kibosh on that one for some time. I imagine at some point it is going to get put through, as there's now a spot ETF in Canada and now Australia. And I believe there's another one in somewhere in South America. Don't quote me on that. All right. Next up, Huobi stablecoin, HUSD, depegged from the USD. Wow. So it appears that the era of troubles for stablecoins is yet to be over, even as the crypto market embarks on the path to recovery after months of hard knocks from the bears and select coin crashes. Now another one seems to be crashing, and this time around it involves a large and popular crypto exchange. It's HUSD, a stablecoin created by Huobi crypto exchange. So I don't know who uses Huobi. Just the name alone, stay away from Huobi. I won't get too much into that, but I will tell you that things are getting thick for HUSD as it experiences a crash leading to a depeg from the 1-to-1 ratio with the US dollar. At the time of writing this, HUSD is trading around 95 cents after falling to 93 cents, marking a 4% decrease from the normal $1 range. So it's unclear what's happening. However, Bloomberg reported recently that Huobi's founder was willing to sell his stake in exchange for $3 billion, which was then denied by the exchange. Ooh. So looks like even the the founder of Huobi was saying, I will dump my Huobi coins and you know, anyways, for $3 billion, but the exchange denied his request. I wonder how that works. Anyways, next up, Ontario, Canada. What are they doing over there? It's kind of like Colombia, putting on some restrictive regulations on their citizens. No doubt that, you know, those cronies up in Canada, they seem to be more on the socialist, communist regime. And, you know, not to say anything about the citizens, that is, they're great people. But the government, which, you know, had a huge backlash against the truckers who were getting paid in Bitcoin to, anyways, we don't go into all that, but I don't like this. It says Ontario crypto exchanges impose a 30K CAD annual limit on altcoin buys. So why are they limiting people to buy 30? I mean, literally the most you can buy in altcoins is $30,000 worth in Canadian dollars. It's to protect crypto investors and make them more aware of risk associated with crypto assets, according to the exchange. Canada-based crypto exchange Bybit and Newton enforcing the $30,000 Canadian annual buy limit for restricted coins for their users based on Ontario in order to protect consumers amid tightening regulations. Anytime I hear the government saying, oh, we're trying to protect the consumer, they're full of crap. So let's see how that turns out. I imagine some people will be turning on their VPN and just going elsewhere to buy those coins. Now, let's get into the fun part. Let's get into the glorious part here that we have been talking about. This setup took some time, and it was yesterday. And, we kind of called this out on CMEs a couple of days ago, but, and look at that. There's the move I was talking about that was initiated by yesterday's 2-day closure. We did say any kind of a closure below 23,400 on CMEs yesterday would beget a little bit of a downside move. And this, I do believe, is just the beginning. Not to say we can't get a what's called a backfill on this closure, which the next 2-day on CMEs won't close until Monday. So, but this was the ascending triangle, and as you can see, it was very, very tightly being held up, and again, multiple points of confluence on there. But the measure move, down to call it 21,000, all but swiftly was hit. The other thing we did call out and say, hey, look, we had multiple drives of bearish divergence coming back on the daily time frame from this guy right here, which should give us a shot to the bottom side of the range. So what is bearish? Hidden bearish divergence when price is making lower highs, price is making lower highs, RSI is making higher highs. And you can see this clearly marked off on CMEs. CMEs is a lot easier to watch in comparison to spot price action. Why? I think a lot more professional traders hang out on the futures market, and this is the biggest futures market. And we did say this move would be initiated as volatility expanded above the 20% read. And what do you know? We got that expansion today on the daily time frame, and this does travel over to spot price action as well. So what have we been saying? Volatility's on the floor. We're expecting a 20% move from this expansion. And when will we know it's over? When volatility gets maxed out, similarly over here, that's typically when the move is over. And again, if you want to learn how to follow these indicators, we have a free tutorial on TradingView. You can download it or just click on the link, set up TradingView for free, and then you can start to learn some TA so that, hey, come next bull market, you're not sitting out in the wind wondering what to do. You have a trading strategy and a trading plan in place. Learning in a down market can be quite beneficial because it's a lot easier to trade when the market's just going from 4,000 to 60,000, right? But when things are going to the downside, it's the old saying, learn when it's hard, and then when it's easy, it's easier, right? So I don't know if that's the saying, but you get my point here. And so as I was paying, hidden bearish divergence, right? I'm just going to mark it off for us. And that is when price is making lower highs. So we got a lower high, lower high, lower high, lower high, and confirmed lower high. So this one doesn't count because RSI, we want to see a divergence, right? This is the strength index. Price is making lower highs. RSI is making higher highs. Here, 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 and, could you call that one? Nah, not really. I would say this is the last line in the sand right there. So when you get 3 drives, actually, this is going to be the 4th drive here. The 4th drive, 4 drives is even stronger. Typically, that will give you a shot to the bottom side of the range, which is, in my opinion, the range, is, could you call that the bottom side of the range over the last couple of weeks on the daily time frame? Yes, but we've been consolidating, from this, call it this high right here. Really, I'd say the range is from here to here, right? So where does the bottom side of the range come in at? I'd say closer to this area here at 19,260. And do we have any other things that could line up for this? Let's see, the 2-day time frame. Volatility is extremely low. Stokes are down. The same bearish divergence. And yes, on the 2-day time frame, if we do have a 2-day closure below here, typically that will result in the move to the bottom side of the range, which is going to come in around the 19.5 to call it 19,000, somewhere in that range. And, could we put in a little bit of a higher low somewhere over here? Possibly. Do I think this is all going to happen in one day? No. Probably going to happen sometime later this week. Next week, going into next week. And what else is this lining up with? So let me see if I can get rid of some of these green lines for us here. So the bearish divergence played out on the 2-day and the daily. And then what do we have on the 5-day here? Is it present on CMEs? Just ever so slightly. So from this high here to this high here, right? You have a slightly higher high in RSI, but a massively lower high in RSI. So could this 5-day closure result? I mean, Stokes are still up on the 5-day, and we did get a nice bounce from the lows, a mean reversion bounce as volatility began to decline. However, if volatility starts to tick up, again, we're going to expect price to go in the direction of the trend. And notice this trend line here. Is it lining up? Let's see. 3 touches makes a trend, right? So not exactly. So again, do I think we break it on the first pass down here? I don't think so. I think the market has a tendency to want to just painfully drag everybody in and out at the very first terms, right? So they want to see people buy right here, all right? Think we're getting bullish. And something we did mark off and say that I noticed yesterday, actually, was that we were going to get some selling pressure coming off of this wick right here. And that is the coronavirus, not the coronavirus dump. That is the Luna dump. The Luna dump, right? So we came in right there, tested that wick, and rejected. So do I still think we could pop back up? We'll kind of judge that as we go, right? We will have a drive of bullish divergence if we don't take out this low here at, call it 21,000 right here. And that's where price is making a higher low, but RSI is making a lower low. So that is on the board. However, if we do take this guy out, that'll be pretty much confirmation on CMEs that we're actually going to come down to this level. And let's just line it up with the volume profile and just see where we're at. Yeah, so the point of control here is coming in right here. Let's see if that raises it up any. Nope, point of control right here. Yeah, at this pivot. So if we do lose this pivot, I would suspect that we do, revisit some of these lows right now. Now, how do we mediate this? Does, we completely get shafted to the bottom side of this range right away? I think we're more likely to bounce off of this region than not at the first pass. Why is that? Well, a couple of reasons. One, Stokes are extremely low and will cross back up above 21,500. So on the 4-hour time frame, actually just a tick above here at 21,695, I would expect we come up to this 9 exponential, and if the 9 governs, right, that's continuation to the downside. And we will have a drive of bullish divergence. One drive there. Two drives there. So coming back from that point over here, and I'm sorry it's hard to see. I'm going to get rid of the volume profile. But on the 4-hour time frame, we got higher lows coming back from this point right here, right? That is a higher low. So 1, 2. So 3 drives gives you a shot. First target, yellow 21. Second target is the green 55. So do we have 3 drives yet? Clear, stop, and reverse points. 1, 2. This would be the second drive. How do we confirm this? You need a 4-hour closure to close above 21,770. And that'll look good for at least a move up to back to 22.2. And that's sometimes what price likes to do. After it makes a move, breaking the range from this low here to that high, price does like to come and retest the breakdown level. I mean, we almost hit it to the T. It looks like we have a little bit more to go, in fact. But, close enough is close enough, and that looks like right on the money right there. And so volatility, again, why is this move on the shorter term time frames, I think, a little more likely to bounce than not? Volatility is almost maxed out here. It's one of the highest reads that we have seen since going back all the way to June 22nd. Sorry, June 13th. And yeah, that is the highest read we've seen. And so when volatility maxes out, what you can expect is volatility comes down, a mean reversion bounce. And so do we consolidate over the weekend, maybe play out a little bit of a bounce over the weekend? Or do people just say, oh crap, I'm done, I'm out? I don't think so. And so, all right, let's take a... So lastly, I'll follow up with this. Let's take a look at spot price on Bitcoin. And we've been talking about this bear flag, which does have implications all the way down. And notice how we said yesterday that if that, we've been saying actually all week long that, hey, this lower high was pretty much confirmed up here. And any kind of a closure below the yellow 21 very likely gets us that move down to this base level. If that level broke, we were expecting a test of the bottom side of the rising channel or bear flag. And we said, hey, look, probably not going to break on the first pass. Why? Because of open interest. Open interest is relatively low right now. We want open interest to get up above 12 billion. Right now, open interest, let's see where we're at. Open interest is referring to all the leverage positions on the board. The more leverage on the board, the more likely, oh, and look, open interest coming down as people are getting liquidated. So the more, open interest, the bigger the move to the downside. So open interest yesterday, I think it was about 9 billion or 9.5 billion. Did we shave off $1 billion in open interest? Today, it looks like we did. So as open interest does come back down and, maybe gets down this trend line, I wish I could draw it out on this chart, but I don't think I can. But that's coming in at open interest around 5 billion, open interest around 5.6 billion, open interest right here at 7 billion, and we're currently at 8.5. So as open interest comes down, again, you would expect price to go in the direction of the trend. And here's what I would say is that if we do lose this region here, let's just take a fib retracement. And we did call that the line in the sand yesterday. Could we get a little more on this move? I think we could, especially if stock market pulls back a little more and if the dollar wants to, really start going. And again, I'll bring attention to the BBWP, which is nicely getting above the 20 percentile. And we did say, hey, why was that last move likely a bit of a fake out? Well, volatility did not get above the 20 percentile read. And now here it is clearly lifting off. And so let's just wind it back, right? Notice how it's, these patterns are very confluent here. So Stokes are down, volatility low. As you get the expansion above the 20 percentile, right? There was the 20 percentile. Okay, on the 12-hour and lift off to the downside. Okay, 10 hour. 10 hours up there, 8 hours up there. So, who really got the move? Was it the 8-hour here above the 20 percentile? No, that wasn't it. And the 4-hour, now you notice 4-hour is beginning to contract and the move is slowly but surely getting faded, right? Right along that trend line where we were saying, hey, we're probably going to bounce off this area the first pass. And now we're creating that hidden bullish divergence, which is when price is making higher lows and RSI is making lower lows. So we have it coming back from this point right here. And that is going to be several drives, which I would expect that bounce to be okay. And so what am I talking about again for hidden bullish divergence? Price is making higher lows coming. I'm just going to mark off this point right here. And if we do break this point, I do believe it is going to be the next indicator that the rest of this 20% move is completed. I think we're down 15% right now from the highs. The next thing all right, so where's my tool here? I'm going to mark this off right here. And then I'm going to use the drawing tool to show you these higher lows. And I'll mark it off here too as well. So let's get another trend line out. And boom. So notice how we're making higher lows. Yeah. 1, 2, 3. Now, this is not a confirmed higher low yet. That would be the fourth drive, which, in my opinion, could get you a shot all the way up to the yellow 21 or the green 55, anywhere in that region. But typically, going to test the breakdown trend line, coming in at 22.5 right there. That was the breakdown trend line. So let me just slow down just a second. The 4-hour closure will cross up here in the next 4 hours. And if we do get a tick above this 21,613, I would expect a minimum move up to the 9 exponential moving average. And if we confirm this as a local low, again, the same thing is happening on CMEs, which the CME 4-hour closes in 2 hours. So any kind of a closure to confirm this as a local low would be, I mean, technically in my book, it's anything above this guy right here at 21,579. That would confirm that, and that would be the 4th drive, which should give us a nice little bounce all the way back up to, you know, could be as high as 23,000. And that, in my opinion, would be the next great short opportunity. If you ask me, what you want to see is something like this. For volatility to come down, volatility to come back down, reset, right? And sometimes it goes like this. Sometimes it comes down, and then that's the second big move, right? But if it really comes back down somewhere any below the 20 percentile and then starts to get lift off again, in my opinion, that will be the next fulfillment of the move to the bottom side of the range and the channel breaking. So let's just see what's on the other side of the fence. Okay, so where does this get invalidated? Where do we say, hey, 20% move is not going to happen. We're not heading down to 19 to 20,000 in this region right here to fill in these wicks. Where would this get invalidated? That's the big question. And because, you know, these things are not 100% accurate, but we've been talking about this for weeks, about a 20% downside move. How far down are we already? We're down 15%. Does it just go straight down 20% in one shot? Usually not, right? Usually there's bounces along the way. And this trend line has been supported for some time now. So you wonder why the market chose today to be the big red day. Well, NASDAQ's down big. And as we were talking about, you know, most of these guys were coming right into their purple 200 exponential moving average. I believe the simple is a little bit higher, the simple 200, but I was talking about where does this get failed, and I'll just bring this up right now. So how would this get invalidated, this move? Any kind of a daily closure back above 23,500, and I'd be looking at this as a failure, most likely. But just to be safe, let's put a fib on it. So, yeah, back above the 618 at 23,137 to play it, you know, safe, you know, 23,400, or excuse me, 23,700. Back above the 786, but typically bounces can come up. Strong bounces, the bull traps, right? Which I wouldn't be surprised for something like that to happen. We get a nice little bounce up, back to test that breakdown level right at the 618, and then rejection and continuation of the move, which, again, when volatility is extremely low like this, Stokes are down, all the bearish divergence is playing out, and then we're going to have bullish divergence on the other side. So the bounce, you know, coming back from right here, I would say this, yeah. Could this be the second drive if we do get a bounce right here? Could you call that a low? Is that a clear stop and reverse point right there? No, I don't think so. I don't think so, but sometimes that can work. So you got 1, 2 higher lows in price and 1, 2 lower lows in RSI, which would be hidden bullish divergence, which could give you a bounce back, you know, up to test the breakdown level, which is right here at the 0.5, pretty much at 22,730. So Pivots to be aware of on the market for spot price. Where does invalidation come back in at? I would say at the 618. So I'm going to mark that off right here. And yep, so now we got upside and downside targets. So the downside target here, call it 19,200. Gonna draw this back up and get rid of some of these lines because it just looks crazy right now. And I'm going to get rid of, that's the measure move on the bear flag, and that would more correlate with the 5-day time frame, which we did get that closure yesterday. Does this confirm as a local high? Well, I think we got to wait for pretty much another 5 days. There wasn't a whole lot of volume there. So a lot can happen in 5 days. Let's not worry about that right now, but that will have implications where price is making almost, I would almost confirm this as the high. Yeah. Rejection off the yellow 21. And we didn't quite get to the wick on spot price, but we did right on CMEs. Let's see how it looks on CMEs. Oh, this video is getting 30 minutes long. I'm going to end it here soon. CMEs closed very similarly last night. Very similar. No, it didn't. CMEs did not close last night. Excuse me. So I'm just going to clear up my charts here and get back onto spot price, where we're talking about invalidation on the daily time frame. Nope, it wasn't this one. It was this one. So invalidation coming at 23.3 and basically continuation below this point right here. And that was on the 4-hour time frame. Nope. I got too many charts going today, guys. I think I'm going to leave it off with that, but that was this point right here. So below there on the 4-hour, I would look for the full-on move to get hit. And actually just scratch that. We want to see volatility reset a bit. More likely to have a bounce than not. If we come up and test the breakdown level here, which is pretty much right there, I think that would look good for the next move to the downside. RSI is extremely low, so again, that is why I'm expecting a bit of a bounce before anything. What chart did we have? Oh, here it was. This is the one. So as long as we're making higher lows above here, so that, you know, more likely than not, you know, to play some bounces out. But again, if volatility continues to expand on the daily time frame, that's going to look good for the move all the way down to about 19,700 to 19,000, somewhere in this region. All right, that's it for today, guys. Hope you have a blessed and highly favored day, and check back in next week with us. Again, let me know in the comments below, should we put the news in the beginning or in the end of the video? Take care.